Do you find yourself stressed out by irregular income? Whether you're a freelancer, small business owner, or juggling multiple side hustles, managing fluctuating paychecks can feel like a financial roller coaster. But it doesn't have to be this way. In this video, we will explore 5 smart money strategies that can help you regain control and manage your finances confidently, even when your income varies month to month. Let's dive into these essential rules that will empower you to build a stable financial future, no matter how unpredictable your earnings might seem. 1. Know your baseline expenses. Understanding your baseline expenses is the foundation of any solid financial plan, especially when dealing with irregular income. Start by listing all your essential expenses, including rent or mortgage, utilities, groceries, transportation, insurance, and debt payments. These are the fixed costs that you need to pay each month regardless of your income level. Once you establish your essential expenses, take it a step further and calculate your comfortable level of spending. This includes wants or non-essential items like subscriptions, entertainment, dining out, and occasional treats. Knowing this figure is crucial for understanding where you can cut back during slow months or where you can spend more during more lucrative times. Take time to track these expenses monthly, using apps or budgeting tools to get an accurate picture of your financial habits. This will help you predict what you can afford, no matter how much or little you earn that month. If your essential expenses are consistently high, it's a sign that you may need to reassess your lifestyle or reduce unnecessary costs to maintain financial stability. By regularly reviewing your baseline and comfortable expenses, you can make informed decisions on how much to pay yourself every month. This proactive approach also gives you the freedom to manage your finances flexibly without feeling stressed when income fluctuates. It's all about creating a system that aligns with your financial goals and adjusting it as necessary. 2. Build an income buffer account. Creating an income buffer account is an excellent strategy for managing the unpredictability of irregular income. When you rely on multiple income streams or face fluctuations in earnings, it can be challenging to ensure you always have enough money to cover your monthly expenses. This is where a buffer account comes in handy. To set this up, create a separate savings account dedicated to your buffer. After depositing your earnings into your main checking account, transfer a predetermined percentage into your buffer. This buffer acts as a financial cushion, smoothing out the ups and downs of your cash flow. Think of it as a backup fund that provides financial stability, even when business slows down or client payments are delayed. The amount you deposit into the buffer should be flexible, but it's ideal to keep at least 1 month's worth of living expenses there. Over time, you can build up a more substantial buffer by contributing a larger portion during high-income months. The key is consistency. Depositing a steady amount, even if it's small, ensures that you're always prepared for the unexpected. For those in freelance or gig-based work, this strategy can help reduce the financial stress that comes with irregular paydays. By knowing that your bills will be covered no matter what, you can focus on generating more income without worrying about missing payments. 3. Plan ahead for taxes. When you have a regular income, tax planning becomes even more important. Unlike traditional employees who have taxes withheld automatically from their paycheck, freelancers, gig workers, and business owners must take responsibility for setting aside money for taxes themselves. Without proper planning, you may face unpleasant surprises come tax season, which can lead to stress and financial strain. It's crucial to stay on top of this from the beginning, so you're not caught off guard by your tax obligations later on. A great starting point is to set aside a fixed percentage of each payment you receive. Typically, this percentage falls between 25% and 30%, but it may vary depending on your income level and your tax bracket. It's essential to account for both federal and state taxes, as well as self-employment taxes if you're a business owner or freelancer. To make this process smoother, consider creating a separate taxes account. This helps keep your tax savings separate from your working funds, so you're less likely to accidentally spend it. By consistently setting aside money from each payment, you're taking control of your financial future and preventing last-minute scrambling when taxes are due. In addition to setting aside money for taxes, it's important to keep track of all your business-related expenses. Office supplies, software subscriptions, equipment, travel costs, and other necessary work-related expenses can often be deducted from your taxable income. These deductions help lower your overall tax liability meaning you could potentially owe less than you initially anticipated. Tracking your expenses not only makes your tax filings easier, but also ensures you're maximizing your savings. Lastly, consider making quarterly estimated tax payments, as recommended by the IRS. Freelancers and business owners should plan to pay taxes every 3 months, rather than waiting until the end of the year. By doing so, you will reduce the risk of facing a large lump sum payment and avoid penalties. Proactive tax planning can help you stay ahead and maintain a healthy cash flow, making tax season much more manageable. 4. Separate business and personal finances. Keeping your business and personal finances separate is one of the most important rules for managing irregular income. Many freelancers, small business owners, and gig workers make the mistake of mixing personal and business accounts, which leads to confusion and poor financial tracking. By maintaining separate checking accounts for business and personal expenses, you can clearly see how much your business is earning and how much you're spending. This also makes it easier to track business deductions for tax purposes, as you'll have a clean record of all business-related transactions. Without this separation, you risk missing out on deductions and creating unnecessary chaos when tax season comes around. Additionally, separating finances helps you set clear boundaries between work and personal life. When you're not using the same account for both business and personal expenses, it's easy to determine how much money you need to pay yourself each month. For instance, you can pay yourself a fixed salary or simply transfer a portion of your earnings into your personal account each month to cover living expenses. Using bookkeeping tools like QuickBooks, FreshBooks, or Wave makes the process even easier. These tools allow you to track income, expenses, and deductions automatically, even when you're juggling multiple income streams. Having a clear financial picture will not only help you stay organized, but it will also make you more confident in your ability to manage irregular income. 5. Build a safety net for slow seasons. One of the biggest challenges of irregular income is dealing with slow periods. Whether it's a natural ebb in your business, a lack of client work, or a seasonal slowdown, these times can cause financial stress. Building a safety net will help you stay afloat and avoid scrambling for funds during these tough months. Start by building an emergency fund that can cover 3 to 6 months' worth of living expenses. This fund is essential for anyone with irregular income, as it provides peace of mind when business is slow. Aim to contribute extra during high-earning periods and allow your emergency fund to grow over time. If you're a freelancer or a small business owner, consider diversifying your income sources to reduce the impact of slow seasons. Adding side hustles or finding new clients during these times can provide additional cash flow. This approach ensures that your financial situation remains steady, even when one income stream is lagging. Additionally, slow seasons offer an opportunity to review your financial goals, learn new skills, or even restructure your business to prepare for future growth. During these slower times, you can focus on growing your network, refreshing your portfolio, or improving your services, which can set you up for better opportunities in the long run. Managing irregular income can be daunting, but with these 5 strategies, you can build a more stable and confident financial future. Whether it's knowing your baseline expenses, setting up an income buffer, planning for taxes, separating business finances, or building a safety net, these steps will help you navigate the ups and downs of fluctuating paychecks. If you found these tips helpful, don't forget to like, share, and subscribe for more personal finance insights to master your financial journey in 2026.